Welcome to IAASA Insights, the podcast that explores the work we do at the Irish Auditing and Accounting Supervisory Authority to uphold quality corporate reporting and an accountable profession. I'm Eileen Townsend, Head of Standards, Policy and Organisational Development here at IAASA. As listeners will no doubt be aware, IAASA is Ireland's accounting regulator, and today we'll be focusing on a recent IAASA publication in corporate reporting, our 2025 observations paper. Joining us today to explain the content of this publication is Lisa Campbell, Head of Operations here at IAASA. Welcome, Lisa.
Thanks, Eileen. It's great to be here.
So firstly, Lisa, what kind of reporting are companies in Ireland required to do and who is interested in it?
So all companies in Ireland are required to prepare annual reporting. The type of reporting varies depending on the company size, but the purpose is the same for all companies, and the purpose is to provide stakeholders with a clear summary of the performance and financial position of the company. And there's lots of people who have an interest in transparency and accountability in relation to performance and financial position. And that is everyone from investors, employees, creditors, and finance providers. So then, because of the importance of these interested parties, the law also provides for the checking of the accuracy of those reports. So everyone, apart from very small entities, has to have a statutory audit who will check that the reporting is accurate. And historically, the corporate reporting was exclusively financial, but since this year, there are some companies also have to report on sustainability as well.
And so IAASA's role then in relation to accounting regulation or supervision, it is focused on a particular category of company or entity. So could you clarify that for listeners? Who's in IAASA's scope?
Yeah, so we refer to issuers, and what they are listed companies that can have general public investing in them. And for those companies, European law allows for or requires an additional layer of supervision by a public body. So I would note it's not all listed companies that are subject to this additional check. So some listed companies are set up in a way that the minimum amount you can invest is 100,000 or more. And in those cases, the investors are likely to be like professional or institutional investors. And I suppose the assumption is that those investors are capable of carrying out their own due diligence and they don't need the added comfort provided by the public body check. Then what we do, I suppose, is focused on those companies where you can have a member of the general public investing in them who aren't able to do their own due diligence necessarily. And so we provide that service to the public then.
And so the observations paper that you've recently issued is focused on corporate reporting by those entities. So can you give us an overview of the observations paper and what its purpose is?
Yeah, so this is an annual public statement where we set out topics that we feel warrant particular attention by those who are preparing corporate reports. So of course, yes, it's of particular interest to those companies who fall within our remit, but the messages in it do apply to all companies. And really, it's a guide for all who are involved in the preparation and approval of corporate reports. So that includes like the management, the directors, the audit committees, and even the auditors.
And so this year's observations paper is structured around three key themes. Can you give listeners an overview of those?
Yeah, so we landed on three separate sections this year. And the first section really talks about the general environment that we're all living and operating in right now, which is one of significant uncertainty and volatility. And then we dive into some particular points around sustainability reporting. And then our last section is on the financial reporting pointers.
Okay, so perhaps you'll start with the general environment and the uncertainty and volatility that you mentioned there and how that might impact corporate reports.
Yeah, so, we're all very aware, no doubt, of the current geopolitical risks and the volatility in the environment. So, we have wars, we have trade wars, we have tariffs, we have supply chain disruption and commodity price volatility. And all these things can impact companies in various ways. So examples might be, the valuation of their assets, changes in the revenue pattern, need for provisions. So companies really need to consider what are the key assumptions that they're using, maybe in their valuation models. They also need to be aware of risks in relation to any debt covenants that maybe, they might not be complying with. There might be issues with going concern assumptions. And really what we're saying is that companies should provide very clear, detailed and entity-specific disclosures so that their stakeholders receive relevant, accurate and timely information that will allow them to understand how all of this affects that particular entity's financial position and performance.
Okay, so that's the general environment then. And another key theme in the paper is sustainability reporting, a new requirement in 2025.
Yeah, so the Corporate Sustainability Reporting Directive, which is a European directive, came into effect for December 2024 year ends for the companies in scope in Ireland. So this applies to a pretty small number of companies in Ireland at the moment, but it has a pretty big impact for those companies. So there's a separate specific set of reporting standards, and those reporting standards have over 1,100 data points that companies need to consider. And it covers lots of different topics. So you have environmental topics, and they include climate, pollution, water, biodiversity, and resource use. Then there's a separate couple of standards covering social aspects, so considerations about the workforce and consumers. And then finally, there's a standard on governance of sustainability matters. So it's a really broad range of topics.
Mhm.
And as well, the sustainability reporting environment itself is undergoing a lot of change right now because the European Commission is revising the requirements with a view to reducing the burden on companies. So this is very welcome news for companies who will be in scope because, it was a big undertaking to comply. However, unfortunately, the reliefs that are coming won't be in place for the December 2025 year ends. And so that's one thing that we felt was important to highlight in this document.
Okay, and then what key messages are there in there for companies about sustainability reporting based on IAASA supervisory work to date?
Yeah, so we examined a number of these reports during 2025, and the good news for all concerned is that we found that the companies, had done a lot of work in this area, and they were broadly compliant. We had no significant concerns arising, a couple of minor points here and there. But we also know from our engagement with those entities, but also lots of other companies, that a lot of lessons were learned from year one, and going through the process for the first time, and also companies were doing it blind because they didn't know what other companies' reports were going to look like. Whereas now they have the benefit of being able to see the reporting of other companies as well as what lessons they learned themselves. And so what we hear and what we expect is that companies are going to have their reporting look a bit different in year two. So we wanted to be clear that we are continuing to do the examinations. So we are going to be looking at least 2 companies next year out of the 12 that are in scope. And we also wanted to highlight that our focus will be on connectivity between the sustainability information and the financial information, and as well as looking at how companies dealt with the double materiality in year 2, because that's likely to look quite different to double materiality assessment in year 1.
So plenty in there for those who are sustainability reporting for sure. And then the third theme is, of course, financial reporting. So what key topics is IAASA covering in that theme?
Yeah, so we had a lot to talk about under this heading this year. So there's quite a few specific topics in there. So we have specifics on reporting of financial instruments. We talk about the global minimum tax rules, deferred tax assets, segment reporting, quite a few new standards on the way. So there was quite a lot in this particular section, which we could probably do a whole separate podcast on, but we won't keep people too long today, maybe.
And so maybe you'll just say for listeners that will be interested, how do you decide what topics you're going to include in the observations paper?
Yeah, so we do 2 things really. We look back and we look forward. So when we're looking back, we consider, was there common areas of deficiency that we found in our examinations? Or, we engage a lot with our European peers. So sometimes we might not have found something, but our European peers maybe found something that we think is of relevance in Ireland. And then when we're looking forward, we think about things like new or amended reporting standards, changes in legislation, things around the reporting environment. And we try to, I suppose, just provide pointers as to what people should be thinking about.
And you mentioned your European peers there. Isn't there a similar statement issued each year at European level also?
Yeah, so the European Securities and Markets Authority, or also called ESMA, they issue an annual document that they call the Common Enforcement Priorities, and that sets the priorities for all European accounting regulators. And that's aligned with ESMA's focus on having harmonized regulation across member states. So we're very involved with various ESMA groups, and so we're always very involved in the development of that statement. So naturally, we often see quite a lot of overlap with our observations document as well. So we expect that ESMA will issue their ESEPS document in late October. So we'll repost that when we see it.
Great. Okay, Lisa, thank you very much. So certainly some really useful pointers there for corporate reporters in Ireland. And indeed for any listeners who want to check out the observations paper, visit our website at www.iasa.ie, where you can download not just the observations paper, but other publications and also access other helpful resources. Thank you for tuning in to IAASA Insights today, and we look forward to welcoming you back for our next episode.